Scott Fitzpatrick, and I'm just going to add this video to my YouTube channel. It's a quick run through what I do for work to subsidise my life in Spain. I know I've been posting these little short videos with no commentary, etc., but I will be getting more, what should we say, well, just videos with commentary, exactly what I'm doing, where I am. So the ones that are on there at the minute, I know they're a bit poor, but bear with me. Now, I trade, I'm a retail trader. I trade on a weekly basis. Sometimes I'll trade on a daily basis. Most of the time I like to get in and out within 2, 3, 4 or 5 days. And realistically, all I wanted to do was just put this video on there just to show you and possibly give you the chance to learn the back end of it, really. Learn what I've took 5 years learning, and maybe you could learn the basics a little bit quicker and start earning you some money maybe on the side of your job you've got now, or take it to the next level and completely change your career. And I just want to quickly go through a setup of what we look at when we're looking at charts, etc., where you're going to buy it or sell it. And yeah, this is really a real quick run through, and I will be putting more videos on here going a bit more in depth of what everything does mean, because this is going to look a bit like a mishmash to you if you don't know what you're looking at. So this is gold USD, gold against the American dollar. Strength wise, the gold is bullish, is stronger than the American dollar at present. So when you're trading, realistically, you want to look at, if it is bullish, you want to be looking at buying the pair. If it's bearish, which means it is going down, you want to be looking at selling the pair. Now, realistically, gold, as we can see on this chart here, was in what we call a range. And a range is when the market spikes up higher from a certain level. And if I squeeze this chart in for you quickly, I'll show you what I mean. Now, this is what I mean by spiking up from a high level. See, the gold was down here, spiked up. See, but once it spikes up, it goes into a range. So let me quickly reset this first. So there's the range. That's the range back to normal. So whenever you get a spike up in the market, it will go into a range, which is what happened last week on gold, and we got into this range. Now this is the back end of last week, 7th, 8th, 9th, the Wednesday, Thursday and the Friday. And as you can see, we just bounced about in the range. We went from the top of the range, didn't quite make the top there, bounced back to the lows of the range, got up, got through the range. I think this was a bit of news, back down into the range again. So look, use that range all week. So you would have, what we've done with this range is we buy the bottom and we sell the top. All the time we're in the range, all the time we're in the range, and we don't break away. So let's get, at the end of last week we were still in it, break onto this week, we continue in the range. In fact, we break out of the range here at the bottom, a little breakout, but there is a rising trend line here. This rising, if you can see it, rising trend line, this goes back 2 weeks, used as a support area for 2 weeks now. As the market is bullish, it's a rising trend line. So as you can see, we start off by Sunday, Monday, we come down, we get to the bottom of our range here, yeah, but we also get to the bottom, we get to this rising trend line, which has been used as support for the last 2 weeks. And a combination of the both there, look, once, twice, and we get into that strong area. We've got a 200-day moving average here as well, very strong area here for support. But what I'm saying, we're into the range, still in the range come Tuesday. Wednesday, we break this range, we break out of the range. So we come up, as you can see, we use this rising trend line again as support, and we break the range. We get through the top instead of going lower to test the bottom, we go higher. Now that range is about 1,000 pip range, if not more. I can't think it's a night. It's around, it might be more, it might be about a 1600 pip range. So we broke out of the range, we got out of it, and we come down, we retested the top, and then we broke higher, away from the range. We broke away from the range, and never leg higher. Leg higher, got to this area here, which is a area of resistance. It's an area which we'll go into more detail if you like these videos. In any case, we spiked higher and we got a little bit of selling pressure here, which spikes it back lower only to this, which is called a moving average. Now we will go in depth with these later as well. We get back down to this moving average and don't get back down into the range. I mean, it gets to this and it reverses back up and it makes a new high, beats this high, makes a new high before collapsing back in again. Now once this makes this new high, we can draw this trend line in, this rising trend line. So once this makes a new high and crashes back in, we've got this rising support trend line I talked about earlier. Now once this starts crashing back in, the realism of this is that we want to see this, that the sellers aim will be trying to get to this level here. And as you can see, they failed at this moving average, yeah? They failed to get there, which sent the markets higher quickly. Look, bang, up it back went. Now this level here, once this level is made as well, we don't just draw this down, we've got a new resistance level. We draw this resistance level in. So as you can see, once this comes in, it spikes up and bang, we're up at this resistance level. But not only that, the bulls wanted to retest this level here, this top of this wedge pattern that we've put in, this rising trend line that we've made once this was formed. And that is the area that the bulls were trying to get to. Now, to be a seller on this, we wanted these bulls to fail to reach this area and to make a new high. Now, once they fail, and we know that there's a failure there, we won't trade this on this time frame, we'll go to a shorter time frame, but we know that that's a failure there, that is a sell. Now, once you short, we short this back in, and we'll now the bears, because this is a failure, we'll be looking for the bottom of this wedge. So your entry and your take profit is there, that move. Now once you get here, we've gone bearish, you can see that, yeah? This level here is a very strong level, and as you can see, it comes up, retests that level as a resistance level. You can see that is a 32% retracement on the Fibonacci. We'll go into that, but it gets there and boom, there's your move, lower. Big bearish move lower, spiking through our strong support and then getting down back into our range. Okay, so now we're back into our range from last week. A typical move on gold. The range on gold is called a magnet. So last week's range is now back in use. I see Monday coming, we'll get into this, I think we'll get back up, we'll test that as resistance, and I think this will fold in. This will fold in down to this level, and this level here is the 50% retracement on the Fibonacci. You'll often see once you get a spike up through the levels off the 61%, up through the 50, you usually see these used as a range. So this 50 to 32% retracement will now be used as a big range, I'm presuming, for a couple of weeks. Good to trade. So Monday, once up here, test this as resistance, we'll short that off that, back in, and we'll be using this 50% retracement as our support level, and we'll be watching carefully Monday, Tuesday for this to fire back higher, to find these sort of levels up here again, maybe even creep back into this wedge, which is still in play, and maybe reach the top of that wedge. I know that was quite a lot of information in one video, but it's worthy of trying to get your grips with it, because it can be a real nice little money earner, and make it a career and travel and work wherever you want, your time, and whatever else. So I'm going to post more videos. Hopefully you will like and subscribe. Thanks a lot.